presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Mike in Southern California. Hey, Mike, what's going on?
Hey, Tom, nice to talk to you again. And I have to start out and first tell you, I love this trading room. This thing is great. This app, it works great. And getting all the information, you're like instantly there. No delay, nothing. That's
I know.
great.
I appreciate you growling problem with us.
Your channel is in my pocket all day long. It's wonderful.
Thank you, man.
Again.
Thank you.
Now, Tom O'Brien.
What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. We're going to be joined today by Basil, Chapman, and Tim Ord, as it is a Tuesday. All right, so let's check out what we got going on. Okay, FOMC meeting tomorrow. I don't know what I was talking about today. It's tomorrow. It's always on Wednesdays. The SPY trading off about 1.14%. Okay, right, you had a lot less volume yesterday. We were kind of hypothesizing that this could be what would happen today with that. It doesn't seem like we have too much volume today either, but we'll see, of course, what happens within this hour. Again, you could get we could have been making a bottom around this level, right? Movement to the upside on light volume does not give me much confidence that we're going to be moving much higher, okay? But if we keep kind of coming down around this level on low volume as well, we could be seeing what, kind of thinking is that we might get some kind of consolidation around these levels. We made that bottom right there on March 14th, and we wait for better economic news. Now, of course, we are waiting to hear what the Fed has to say. If they believe that this kind of outlook is, if the economy is getting strained enough, we might get more rate cuts this year than is currently priced in, which is about 2. I definitely do not think that you're going to get a rate cut tomorrow. I know some people are taking a look at that, but I don't see that as the case at all. Composite off 1.56%. This is coming out of NVIDIA. Was quite down at least earlier. They're of course having their quantum meeting. They had a big, what is it called, the GTC today, and they're still down. So I don't know. I wasn't able to listen to it today because I've been running around, but it is unfortunate. One of the things I will say that I took away from some of the headlines, at least with NVIDIA's kind of whole expose, is they're going to work with GM on assisted driving and to develop 6G networks. Ooh. Not that 5G necessarily worked at all. They're calling it AI native wireless network hardware. Very interesting. Involves companies such as T-Mobile and Cisco Systems. So I'm interested. Of course, we like going deep dives on tech on this show. So I'll have to do some more research and we can kind of talk about that and what it might mean. But regardless, you're off 2.39% today. One of the things that I do want to say about this is, NVIDIA working with GM on this driving. Listen, I, in a way, think this is even worse for Tesla. Give some good volume to the downside today. You gapped down earlier today off 4.76%. Again, we were just trading, 250 yesterday almost, 245. And we're back down. This is going to continue to happen with Tesla. I think they're in a bad spot. They're getting, there's competition out there. Had this whole kind of research on Tesla that their self-driving system is not as good as just using straight up LiDAR, which is what BYD uses. And LiDAR is, in theory, a lot cheaper. Uber's coming out, Waymo's coming out, right? And this is supposed to be Tesla's big win, was releasing this fully automated self-driving and, in June. And it's look, they already have people who are doing it, So this is a tough spot for Tesla. Again, I'm looking really at a 170, 180 price target for Tesla in a major way. I do not think it needs to be at 730 billion market cap. Of course, we were saying that at 1.1 trillion. Still, this is too high. This PE is too high. So that's some big stuff. Taking a look, I haven't really looked at BBAI today, but I guess it's a big mover. off 14.18%. Yeah. I mean, listen, it's kind of what we're saying with Big Bear. This equity needs some more time. You had a lot of people selling out of it. Their contracts, and by that I mean like their leaders, a lot of contracts were not terrific. And this was just a big hype pump and dump. Happens a lot. So we'll see what happens with BBAI, to be continued with that off 14.18%. Okay, enough of my yapping, because Tuesdays are for, at least the first few segments, we're Basil Chapman. Go over the newsletters tab. We had the opening call newsletter by Basil Chapman. I strongly recommend checking it out. You've heard me speak about it before. Okay, you get these daily kind of updates, and what I think is phenomenal is you get a nice, very long report on Friday or Saturdays, kind of what goes on during the week, what's coming up for the next week. Basil has been doing very well recently. It's been great kind of following around with it. And again, you get subscriber-only webinars, and you don't get that anywhere else. So check out the opening call with a 30-day money-back guarantee. Basil, I know I talked through a lot of the segment. How are you doing?
Hi, Jacob. How are you?
Doing well, doing well.
Yeah, you're covering a lot of stuff that's really important. Thank you.
No, well, thank you for coming on, Basil. What are we looking at today?
So I've got in front of you, you've got the usual, the Dow chart on the left, daily chart, Dow weekly chart in the middle, and on the right is the monthly chart. If you go backwards, you look at the monthly chart, that 9-period, the green 9-period moving average is still way above the 14-period moving average, and that's usually a big positive. The MACD, this is the MACD, moving average convergence, divergence, is just turning down, but it's still positive, and the stochastic is still at 84%, and that's really good. So that's the longer term. The weekly chart has made this H to an M-shaped pattern within a rectangle, right. Took out the left side low, closed under it last week with what I call Chapman wave, a red Roman Chapman wave Roman candle. It's a big red body and then at least a halfway extra to the bottom with the wick or the shadow at the bottom. Okay. So it's very important where we close this week. And if at any point this week we start to trade under 41,060, that says we're probably going to retest the 40,661 low of the 13th, which incidentally, the 13th was when we went long on January the 13th at 41,844. And we are short, we're remaining short just at this particular time. I want to see, let me go to this next chart here, because this is a technique I developed a long time ago. I call it the Chapman Wave Dark News Index. For a long time, these little white rectangles refer to interest rates it was really reliant on the higher interest rates, or interest rates being a factor for the market to pull back, but it usually coincided with some other thing going on. But since December, it really hasn't been that. In fact, the rates have been quite good. But I have a technique where I call for an internal high and then a residual high and an internal low and a residual low. It's like earthquake and aftershock. I can talk about that when we return.
Basil, please hold that thought. Folks, we'll be right back with Basil Chapman after the break.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. We are joined right now by Basil Chapman. Basil is the author of the Opening Call newsletter, is also the host of the Tiger Technicians Hour on at 10 a.m. Eastern Time right here on TFNN. Basil, before we went to the break, we were looking at something to do with the Indu.
I'm using the Dow daily chart, and I've used it for years and years, where I call this Chapman Wave Dark News Index, DNI, and I use it only on the Dow chart. So basically what happens, I look for a low that I think is pretty serious, and then if I determine through the technicals that it's what I call an internal low, it's like an earthquake. An earthquake, you can have an aftershock that is either much weaker, exactly the same, or much greater than the original earthquake. It's the same on the top where I have internal high and residual high. And here I think we made an internal low 4 sessions ago, and I'm anticipating that this will probably, I'm anticipating the bounce that we got, and it could go a little higher, but there's a chance that we're going to still make a residual low, and it'll take a little while before we do that. And that'll mean that we arch over and we either take out the low of the 41,000 or we hold, and that's going to be the test. So that's to the Dow. And just to go with that, as I said, we've been short in the Chapman Wave. You're always looking for a buy signal to be upgraded to a buy mode. That says you should go to at least a peak D. And if you're looking at the DXD, which is 2 times short the Dow, which we've been in for some time since the, I think, 11th of February at 25, it hit 29.71, and now it's sitting on the 200-period moving average after making that peak E. The SPXS, which is the S&P, we've been short, 3 times short. We've got an aggressive small position there. It went from the 580 level on the 24th of February, where we went long, to 7.66 a few days ago, and it's pulled back, and here it is also sitting. So we have these positions, kind of the counter position, saying this is trade, and then within that context, we've had some trading longs over the last few days. Some of them did very nicely percentage-wise, so we've let go some of those. Most importantly, what I'm anticipating is that in this particular phase, and this is going to be very important for my subscribers, I'm looking at certain cyclicals, deep cyclicals. I mean, this is the stuff that really needs economic momentum. They haven't got it yet, but some of them are holding very well, and I'm starting to think that this is the time to get into some of those. We'll have a stop, but even more importantly, I mean, there's a cyclicality here, and there's a rotation through the different sectors. And one of the sectors that I've been along for some time, this is the gold sector. We've got the physical gold. It's the PH. PHYS. That's the physical gold, Sprott physical gold units. But it looks exactly like the gold. That was so nice about it is it's tracking gold, and it's obviously much cheaper. So the gold is in leg C in the daily chart. You remember I said the buy signal usually gets upgraded to a buy mode if the technicals are strong. So this is C, and it should still go to a D. You've already got a D in the weekly chart and a D in the monthly chart. So far, these are all acting very, very well.
Okay.
And to go with that, I talk about this on my show for months. I remember with Tom, I used to talk about it all the time. And he was the gold specialist. But I always said that gold rallies, then silver's kind of looking around and says, oh my God, gold, and then silver chases it. Then gold turns around and says, okay, you can take over. I'm having a bit of a rest. And then when they both go together to new recovery highs, in this case, in gold's case, it's an all-time highs, then all of a sudden, they both together have a bit of a breather. So I'm anticipating in another few days, we will get a bit of a breather in gold and silver. But this is what I'm talking about, that whole rotation. If you can look, you can see that high-grade copper suddenly came on strong.
Yeah.
So this is very important. We just went into one of the soft materials today for the first time in ages. We haven't been in for a while. This is a position that we've been in. It's in the uranium sector, and we've been in a couple of times and really well. I don't know if this will be as strong, but we started another position today. And I like to say that for my subscribers, I try to get stocks that are in the single digits, double digits, triple digits, as long as they are strong. And if I find something that is much lower priced, no, I'm not saying cheap, just lower priced than something in the that is much higher priced, but is probably a leader in the field, the lower price will often be dragged up. So sometimes I do that when I feel that there's a nice percentage gain. In fact, we just had that in core mining. We got in at, I think it was 580, and today it hit $6.84 and still only in leg C. You can see the same cup pattern that I've been showing in other charts. I showed it a moment ago in gold. So I think the idea here is to try to ameliorate deterioration of your portfolio as long as possible in this choppy period, and build up a cash position. We built up a very nice cash position and then put it to work very selectively in what you've been wanting for a long time, which has really taken a beating and looks like it's ready to move up. So I've been preparing, and we've actually implemented some of that plan for subscribers. And as I mentioned, sometimes I have every Friday or afternoon or Saturday morning, I have an hour, it's actually sometimes an hour and a half long video for subscribers. It's almost like a webinar, but I just haven't had time to put together a webinar for a while. So if anyone's interested, they can subscribe, and then they will get this informative. It's a weekly overview that looks at positions that we have, positions that we want, where the market is, what I'm anticipating is going to happen.
Fantastic. Basil, are there any other equities? So at least with silver and gold, right? Let's just stick with that, because gold, is making wild all-time highs, and I know you're saying might be a little bit of a, breathe. Yeah.
What I mentioned this morning, and also to subscribers, is that this is exactly the phase where I'm anticipating that all those very low-priced, those little miserable stocks in the gold and silver area you needed this to happen in the core, the big positions. Now the little ones are starting to move you saw that in core mining, went from $4.86 on February the 28th to today's high of 684. Percentage-wise, that's a big move. So that's what I'm anticipating, so that even if gold took a little bit of a breather, I think some of these little ones can do very well. And it's not that they're bad companies, it's just they haven't been in favor. Some of them have done a lot of work to correct mistakes that they made in that big down move from 2021 down to 2020, the beginning of 24. So that's what I'm looking at, yes. And even we've had Robinhood for a long time, and we went back in as a trade. I think it was Friday. Why is this not coming up? HOOD. There it is. Okay. Robinhood. And we've been in since the 16th. We went all the way to 66. We've been taking little bits off all the way up, trying to keep a core position. And then we've just had two very nice trades from the lows that were made just on Thursday, Friday. And we'll see if we can have another position in Hood that actually works out. Meantime, I'm just calling them trades. So for those subscribers who like to have a little action and want to trade, short term, this is like a swing trade, I'd like to put those positions on as well.
Fantastic. Well, Basil, thank you so much. We'll see you tomorrow at 10 a.m. Eastern time, huh?
Thank you very much, Jacob. Have a good evening.
You too now. Yeah, folks, seriously, now is a fantastic time to get the opening call newsletter. Basil just pays so much attention to that newsletter, and I think it really is just such value added. In other news, I bought some puts on DJT. They have earnings tonight, and I bought at current price 2050, paid maybe 88 cents premium. We're gonna see what happens. Folks, be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hey, welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. Not going to talk too much about this, but I did buy some puts for DJT tonight. Yeah, the IV is kind of high, so I still might get messed up on that. Yeah, I mean, that's jumped up quite a bit. Didn't put a bunch of money in, but there's no way. I'm just going to say, I mean, there is a way. There's always a way for you to get fleeced, but I am pretty confident. I bought strike was $20.50. I think the premium was like 88 cents or something like that. But yeah, they have earnings after today. I mean, this stock is nothing going on with it. And again, I mean, listen, like this kind of made sense. Kind of made sense when you had Twitter as Twitter, but I mean, now that Musk owns it, I mean, come on, like what is the point of DJT existing? And I think he uses it kind of like symbolically, to be honest. I mean, he does post on that, but he posts on Twitter now too. So we're gonna buy some puts. We'll see if again, it's easy to lose money still when you have the IV this high. So we'll see what happens with that. But again, didn't put a bunch of money in at all. Let's take a look. We got anything interesting happening? Lucid popping 10.19%. I think that unless there's some kind of, again, upgrade from Morgan Stanley, does that really matter? Set a price target of $3. I still think this is, we kind of looked at this, their earnings, 7.8 billion is kind of a crazy market cap for Lucid. I think a lot of people are seeing Lucid take over from Tesla. And I think what that is trying to answer is the political issues that Tesla has now because of Musk. But I think that's actually, I mean, of course, that is a big part of the short thesis with Tesla, or at least, a sizable part. But that's not the whole thing. I really do think that this environment is tough towards EVs. I just do. And companies like GM and, Volkswagen or whatever, and Volkswagen's not a great example because they're not in a great spot right now. But these companies have a way better time kind of getting, EVs or automated vehicles out than something like a Lucid does, right? I wonder if Rivian is sharing some of that love as well. Up 2.52%. So I think that's really what this Lucid trade is it's just kind of, hey, Tesla's done. I say Tesla's done, but I mean for the near term, they're not in a good spot. Let's get into Lucid, right? I don't know if that's the best thesis to have, but whatever. We'll take a look at that at some other point, probably tomorrow. So right now, let's go over right here to your web browser. You're going to type in ord-oracle, and we're going to get to the website. This is Ord Oracle. Every Tuesday and Thursday, we are joined by Tim Ord of the Ord Oracle. You check out his website, you get the newsletter, get the book. It is fantastic. Additionally, you can go over to TFNN.com and check the services tab. We have the secret science of market tops and the 6 secret ratios that every trader should know. Strongly recommend checking out at least one of them. I think these have some fantastic kind of insights. Of course, we love having Tim Ord on. His analysis is just fantastic, right? So you get a little bit of an insight into how he looks at things through either of these newsletters. So, Tim, how are you doing?
How are you doing?
Doing okay. We had a little bit of a bounce the past, let's say, Friday and Monday, at least in the SPY, and we're kind of back down a little bit. There's some decreasing volume, I guess.
Yeah. This is similar to December of 2018.
Okay.
And I kind of remember this pattern. But anyhow, let's start looking at the realities of what's going on here. The first chart is the American Association of Individual Investors Bull-Bear Ratio. This goes back to 2017. When I mark the times when this ratio is down 0.4 or lower, we're at 0.32. Going back 2017, that happened 11 times, getting below 0.40, and there's one failure. So that statistic works out to be 91% chance that we're probably making an intermediate term low in this, or I'll put it this way, a multi-week low in this vicinity. So can the low be tested? We'll take a look at that. But anyhow, this kind of looks at the bigger picture. If you notice, all of these were bounces except for this one.
Yep.
But even with the 2022, I guess, bear market, this ratio worked out just fine. So, and we're back down there again, and I expect the same thing to happen. There's a couple of reasons why. Actually, there's more reasons. There's more than one reason, but anyhow. And here's another reason. This is a weekly SPY. This is real easy to back check. You can go back for years, but every time it gets a close below the lower Bollinger Band, it's usually a low of a multi-week. And I kind of blew this up. You can see over here, we closed it below, the open closed below last week. And actually this week, I don't know, the week's not done yet, but we're actually, the open and close so far is below the lower Bollinger Band this week also.
Yep.
So that actually carries a little bit more weight. So we're making a low of some sort here. Can we test last week's low? That'd probably be the worst case scenario. But this, in my opinion, we're in a buy area right here, right now. And most cases, if you look what happened in the past, this was the only one didn't get back to the mid-Bollinger Band. But normally, at a minimum, you get back to the mid-Bollinger Band in most cases. Sometimes you go through them. And I'm thinking at least we get back to the mid-Bollinger Band, which is around 595 on the SPY. That's pretty much where I got long. I probably should have sold out. I kind of waited where I did or didn't. And so it's a judgment call. And so I'm staying long, but now we're probably looking at a midterm low. Best case scenario, we break to new highs. Worst case scenario, we'll probably get back to the mid-Bollinger Band.
Okay. So
not a big scare going on here. Well, there was a big scare, but that, in my opinion, we're at a minimum in a basing period. So that looks pretty good. This is, what did I do this for? Oh, kind of, you can see what better to look at it, I guess. We're here. And also, we're at its previous high of support. This is around this 560 area. We're running into these tops back here. Kind of same thing happened last time we got down below the Bollinger Band. We're at some previous highs here. We bounced back down to it. We bounced off. We're kind of previous highs. So we're kind of working around here, building a bottom. Look, already. All right.
I know. All right, Tim, stay right there. I'll be right back.
All right.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. We're joined right now by Tim Ord of the Ord Oracle. Check out his website at ord-oracle.com. Tim, before we go on, we're closing on the weekly. That idea of a traversal back up to the mid-Bollinger Band, and you've been saying this for a little while where you need some volume moving up to that. So say, you get some, we traverse back to the mid-Bollinger Band on the weekly chart, and there's just no volume whatsoever. I mean, where do you see, or do you see anything yet of a certain price chart to that downside?
Well, actually, we do. To me, what this is going on right here, right now, is probably a selling climax.
Yeah.
Kind of a similar over here. So the market's trying to push down. And to get two closes below the lower Bollinger Band 2 weeks in a row is pretty rare. I don't think it's probably going to happen. I think probably before the week's out, this market's going to rally back up, and we're just in a consolidation. But previous times when you bought below the Bollinger Band, it's a high probability trade. So I'm sticking with the trade that we're probably making the low. And again, worst case scenario is testing last week's low, which I don't think will happen, but it could. But here's the next, here's a chart that to me is real important. There's different signs of strength. You have volume strength, you have advanced decline strength, you have McCollum-Osler, which is sort of advanced decline strength too, but this is kind of a shorter term one, gets you in to know in a fairly short period of time, which is basically the Zweig breast thrust indicator. And to trigger this well, actually, what it is, it's the NYSE advancing issues over the NYSE total issues. You take a 10-day average of it. When it gets down below 0.4, which we hit 0.4 on actually last Thursday, then it has to rally to 0.6 within 10 days, which is basically 2 weeks, 10 trading days, which comes out to be March 27th. And we're setting at 0.5 right now. And so if we get a trigger here again back up to 0.6, we had one here first part of January, and we'll have to bust through these previous lows to get that, probably 0.6. To me, we're back in a bull market.
Okay.
And will that happen? I'm not sure. But the next 2 weeks will kind of open my eyes what will happen. Either just it will be a dead cat bounce, in other words, a rally and a downtrend, or this will be a really bull market that we start breaking new highs again. So I think we got enough fear to be another bull market.
Okay.
But it has to show up with the sign of strength. So that's what I'm kind of waiting for here, if this will happen or not. If it doesn't happen, we'll probably get back to the mid-Bollinger Band or in that vicinity and probably turn right back down again.
Okay.
And if we do get to 0.6, we'll probably take out the highs. So I don't know which one's going to happen. So we'll have to wait and see. But to me, I'm actually still kind of leaning bullish because these signals off the weekly charts are usually multi-week rallies. Up here you rally a couple of months. Here it looks like you rallied about a month. Looks like about 4 weeks. So most cases, you know, to rally that for a couple of 3-4 weeks, this would give time for this ZBT, I guess, to get back to 0.6. So time will tell. Right now, I'm bullish just because the SPY is below the weekly Bollinger Band, and that's a high probability trade. So I'm sticking with it for right now.
Okay.
Let's look at the gold market here. There's quite a few things really kind of going on here that look actually really pretty good. And we talked about this is HUY. I think we got enough time.
Oh yeah.
Well, anyhow, we were talking about this ratio, the weekly HUY ratio staying below 0.12, and here we're actually at 0.12 now. So finally, this ratio is starting to go. How long will it go? It could go months, maybe even years. I don't know. But we're finally breaking out of the buy area. Last time we had a buy area was back in 2024, and that looks like it rallied about close to a year maybe. Then we had a consolidation, went back below into the buy area again. Now we're starting to break out to the buy area. And so this could have legs because this sideways pattern going back to 2020, really, that's all. This whole thing going back to 2013 is pretty much a sideways market.
Right.
I mean, you had rallies, but you didn't. Basically, it was a base building process for the last 12 years. We gone up, we come back down. We gone up, come back down. Even though we're making lower highs, we're actually making higher lows, which was not much, but we're making higher lows. So it's kind of a bullish pattern. But I think we're going to start breaking out of this area. And we got a base of 13 years, which is significant. So what does that all mean? Well, on a short-term basis here, we talked about this chart. And I was thinking, I was telling you, I think it was Thursday or maybe last Tuesday, I think the market's going to get stronger rather than weaker, because to get through this neckline of this head and shoulders bottom, the market has to produce a sign of strength. A sign of strength is energy pushing through that neckline. And so that's the reason why I was saying the market will probably energy are starting to pick up. And that appears what's going on here. The bottom window, you've seen this chart many times before if you've been on this podcast or radio. It's a 50-day average of the up-down volume. And all it needs to do for an uptrend is stay above zero. And actually, back in January, we kind of got a bullish signal, got below 20, but finally got above zero. Looks like, I don't know, January sometime probably. And now we're up plus about 17. And most of these trend following things, this market would just bounce in this range, around that 10 range, 20 at the most, maybe 5 at the least. They'll trade sideways. And I'm thinking that's what's going to go happen all the way into July. So then from there, we may pull back to the neckline, don't know. I don't have no indicators yet on an intermittent term scale saying that we reached the upside. So this head and shoulders bottom, if you do the measurement, in other words, you take the head, which is, I forgot what it was, around 21, to the neckline, which is around 23. But anyhow, if you do the calculations, you come up with the target around 65 on this big head and shoulders pattern. So that's something that we'll have to watch for. But this market is probably going to get as strong, if not stronger, going forward.
Fantastic.
And yeah, here's we got 1 minute to go. You asked me, what to look for on stocks that are making significant lows. Well, this chart is a GOR. It's forgot the name of it, but it's GORO, and this is the monthly chart going back to 2015.
Yep. And
I put a Bollinger Band on it. And what needs to happen is get above the mid Bollinger Band, and it has to have big volume doing it. And if you notice here, the Bollinger Bands are really pinching right here. This stock is really set up, especially with that much energy. In other words, coming in. And if you notice, we've got a big down day there. That's selling climax. And about a couple of months later, you got a big buying spree. They're called railroad tracks. And that's what happens at major lows. At maximum selling, then turns around to be maximum buying. That's what happens at major lows.
Goro. Well, Tim, thank you so much. Fantastic. Another fantastic analysis. Thank you.
All right.
We'll see you Thursday, Tim, okay?
See you Thursday.
Sounds fantastic, Tim. We'll see you then.
All right. Thanks a lot.
Folks, stay right there. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. This is Jacob Shoup. You're watching The Tom O'Brien Show. Just have a short segment left. Goro. Kind of interesting. Tim Ord was talking about Goro. Obviously, like micro cap, basically. You have a market cap of 55 million, trading out 3.76% right now. Quite volatile over this year. Not sure what sent this down, but you've obviously closed that gap in quite a way, and you're sitting essentially right at that gap. Let's see, earnings in it. Gold's a little different. These miners are a little different because you kind of got to do a bit more. I mean, in a lot of ways, it's not, I don't say simpler to do a fundamental analysis on them. It's more straightforward, I would say, because there's not a lot that they're doing. Pretty, basic mechanics with it, but there's just a lot you need to know, at least, to do that. Okay, cash equivalents, about 1.35 million. Their total assets totally outweigh their liabilities, which is pretty solid. Seems they have an insane royalty taxes. See, this is something I gotta take a little closer look into. So they last reported in November. They had about 13.2 million in net sales of that quarter. Gross loss was 8.6 million. What is going on here? Oh, I see. Yeah, and then over the 9 months, they had about 52.7 million. They can, I mean, it was really before this massive run-up, see if he can actually get some, but I need to see how much total output they have, really what, like, the costs are going to be over a year. They should be releasing, I would say, a 10K, or excuse me, 10K somewhat soon. Interesting. Goro, Gold Resources Corporation. Folks, thank you so much for joining me today. Let's see what happens with DJT. Am I going to get IV crushed, or am I going to buy a new pair of shoes? Folks, we'll see you tomorrow morning, 9 a.m. with Tommy O'Brien. Take care.
Building wealth trading in the stock